Look at this chart. Gold is going straight up. And I'm not talking about a normal, healthy market rally. I'm talking about something that shouldn't be happening in a stable, functioning financial system. Because here's what nobody's telling you. Over the last 40 years, gold has averaged about 6 to 12% annual returns. Slow and steady. Boring. The kind of asset class that makes financial advisors yawn. But over the last 5 years, gold has been averaging nearly 20% per year. 20%? That's not normal. That's not how gold is supposed to behave. And if you're paying attention, if you understand what this actually means, this should terrify you. Because gold doesn't explode like this when everything's fine. Gold explodes when something is fundamentally broken. And right now, as I'm recording this, gold is probably hitting another all-time high. But here's what makes this truly disturbing. Nobody can agree on why it's happening. Not traders, not economists, not analysts. Everyone has a theory, but nobody has a definitive answer. And that uncertainty, that confusion, that's actually the scariest part. Because when gold is screaming danger and the experts can't explain why, that tells you something massive is happening beneath the surface that most people don't see yet. So let's start with what everyone thinks is the obvious explanation: inflation. And yeah, inflation sucks. Rent went up, groceries went up, everything costs more than it used to. So obviously, gold is rising because of inflation, right? Wrong. Here's the thing that destroys that theory. If gold was just reacting to inflation, it would have exploded back in 2021 and 2022, when CPI was running at 7, 8, 9%, when inflation was at 40-year highs. But it didn't. Gold barely moved during that period. In fact, gold was relatively flat while everyone was panicking about inflation. It's only recently that gold started gaining serious momentum. So yes, inflation is part of the story, but it's not the main story. Something else is driving this move, something bigger, something more fundamental, something that should make every single person watching this video pay very close attention. What's actually happening is this: foreign countries are quietly losing faith in the US dollar. And when I say quietly, I mean they're not announcing it, they're not making dramatic statements, they're doing it slowly, carefully, strategically, like someone trying to sneak out of a relationship without causing a scene. Because for 80 years, the US dollar has been the global reserve currency. That means it's the currency that central banks hold in massive quantities. It's the currency used for international trade. It's the backbone of the entire global financial system. But that's changing. And the evidence is absolutely undeniable if you know where to look. 20 years ago, central banks held over 70% of their foreign exchange reserves in US dollars. 70%. The dollar was completely dominant. But today, that number is down to 58%. That's a 12 percentage point drop. Now, you might think 12% doesn't sound like much, but when we're talking about central banks across the entire globe, when we're talking about trillions upon trillions of dollars in reserves, a 12% shift is absolutely massive. It's central banks across the world saying, we still need dollars, we still use dollars, but we don't trust them the way we used to. And where is that money going? It's not going into euros, it's not going into yen, it's not going into pounds, it's going into gold. Gold has become the insurance policy, the backup plan, the asset that central banks are piling into because they're nervous about the long-term stability of the dollar-based system. And the numbers are shocking. For the third year in a row, central banks have bought over 1,000 tons of gold per year. 1,000 tons! That's more than double their previous decade average of 400 to 500 tons annually. In fact, 2024 marks the highest gold buying year in history. In history! And this buying isn't slowing down. Over 40% of central banks have said they plan to buy even more gold over the next decade. And 95% of central banks expect gold holdings to continue rising over the next 12 months. This is not a fad. This is not a temporary trend. This is institutional anxiety. This is the biggest players in the global financial system fundamentally repositioning their reserves because they see something coming that they don't want to be exposed to. Now, let me be clear about something. The US dollar is not collapsing tomorrow. Anyone telling you the dollar is going to zero or that it's about to crash completely is either lying to you or doesn't understand how the global financial system works. The dollar is deeply embedded in global trade, in global finance, in the entire structure of the international monetary system. It's not disappearing overnight, but what we are seeing is a shift from blind faith in the dollar to conditional trust, from assuming the dollar will always be the dominant reserve currency to questioning whether that assumption still holds. And that shift, that erosion of confidence, that's what's driving gold higher. Because gold is what you buy when you're not sure about the future. Gold is what you buy when confidence is shaking. And here's what makes this so significant. Gold doesn't rise when people are optimistic, when trust is high, when markets feel stable, when institutions feel safe. Gold is boring. Gold goes nowhere. It just sits there as a dead asset, earning no yield. But when stability starts to slip, when confidence starts to crack, when the future becomes uncertain, that's when gold wakes up. And that's exactly what we're seeing right now. This isn't panic buying. This is preemptive positioning. Central banks aren't reacting to a crisis that's already happened. They're hedging against a future they don't fully trust. And that's terrifying, because these are the most informed institutions in the world. They have access to data and intelligence that regular people never see. And they're buying gold at record levels. What do they know that we don't? But here's where it gets really confusing and really interesting. The stock market is near all-time highs right now. Risk assets are rallying. AI stocks are being valued like they've already taken over the world. Consumer spending is holding up. By most traditional measures, the economy looks fine. But at the same time, gold is also at all-time highs. And this is not normal. Historically, markets pick a lane. Either risk-on assets like stocks are soaring because confidence is high and the future looks bright, or risk-off assets like gold are rallying because fear is rising and people are getting defensive. You don't typically see both happening simultaneously, but that's exactly what's happening now. We're living in a world where stocks are priced for optimistic growth and gold is priced for a troubling future at the exact same time. Every asset class seems to be sending a different signal. Stocks are saying everything's great, gold is saying something's very wrong, and bonds are somewhere in the middle saying we have no idea what's happening. This dissonance, this mixed signal environment, this is what happens when markets are confused about the future, when there's no clear narrative, when two people can look at the exact same data and reach completely opposite conclusions. And markets don't behave like this when the path forward is clear. Markets behave like this when something fundamental is shifting and nobody knows exactly what the end result will be. And that uncertainty, that's why this gold move matters. Not because gold is shiny, not because it's hitting new highs, but because of who is buying it and why. The biggest, most sophisticated, most well-informed players in the global financial system are quietly repositioning, and they're doing it in a way that suggests they're preparing for something big. So what are they preparing for? What do central banks see that's making them load up on gold at record levels? Let me break down the main concerns, because this is where it gets really serious. First, US debt levels are completely unsustainable. The US national debt is now over $35 trillion. The deficit is running over $2 trillion per year. Interest payments on the debt are now over $1 trillion annually. That's more than the entire defense budget. And these numbers are accelerating. Every year the debt gets bigger. Every year the deficit gets worse. Every year the interest burden grows. And at some point the math stops working. At some point creditors start asking whether the US can actually service this debt. At some point the confidence that's held the system together starts to break. And central banks know this. They see the trajectory. They understand the math. And they're buying gold as insurance against the moment when the world wakes up to just how unsustainable this all is. Second, the weaponization of the dollar. Over the last few years, the US has increasingly used the dollar as a weapon. Sanctions on Russia, freezing assets of countries we don't like, using access to the dollar-based financial system as leverage in geopolitical disputes. And every time the US does this, every time we weaponize the dollar, we give other countries a reason to move away from it. Because if you're China, if you're India, if you're any country that might someday find itself on the wrong side of US foreign policy, you're watching this and thinking, we need to reduce our dependence on the dollar. We need alternatives. Because what if we're next? What if the US decides to freeze our dollar reserves or cut us off from the SWIFT system? And gold becomes the obvious alternative. You can't sanction gold. You can't freeze gold that's sitting in your own vaults. Gold is sovereign. It's independent of any government or political system. And that independence is becoming increasingly valuable. Third, the rise of alternative systems. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working to create alternatives to the dollar-based system. They're developing their own payment systems. They're settling trade in their own currencies. They're talking about creating a BRICS currency backed by gold and commodities. Now, will this succeed? Will it actually replace the dollar? Probably not completely, but it doesn't have to completely replace the dollar to matter. It just has to reduce the dominance of the dollar. It just has to give countries alternatives. And every alternative that emerges, every crack in the dollar's monopoly, that reduces demand for dollars and increases demand for gold. And fourth, just general uncertainty about the future. We're living through a period of massive geopolitical tension, wars in multiple regions, rising nationalism, decoupling of global supply chains, the breakdown of the post-World War II international order. Countries are becoming more isolationist, alliances are shifting, the rules-based international system that's existed for decades is fraying. And in that environment, central banks want hard assets. They want things that will hold value regardless of what happens politically. And gold is the ultimate hard asset. It's been money for 5,000 years. It survived the collapse of empires, the rise and fall of currencies, wars, revolutions, everything. And it's still here, still valuable, still trusted. That's why central banks are buying it. Now let me address what this means for regular people, for investors, for anyone trying to protect and build wealth. Because understanding what central banks are doing is one thing, knowing what you should do about it is another. First, this is not a call to put all your money in gold. That would be stupid. Gold doesn't generate income. It doesn't pay dividends. It doesn't produce anything. It just sits there. So having your entire portfolio in gold would be leaving massive amounts of potential return on the table. But having some gold, having 5%, 10%, maybe 15% of your portfolio in gold or other precious metals, that's insurance. That's protection against the scenarios that central banks are worried about. If they're worried enough to buy record amounts of gold, you should probably be worried enough to own some too. Second, pay attention to what's happening with the dollar. Watch the dollar index. Watch what other countries are doing with their reserves. Watch trade patterns. Because if the dollar's dominance continues to erode, if we see more countries moving away from dollar-based trade, if we see the BRICS or other groups successfully create alternative systems, that has huge implications. A weaker dollar means higher import prices. It means inflation. It means US assets might not be as attractive to foreign buyers. It means a lot of things that could impact your wealth, your purchasing power, your financial security. So stay informed. Don't just assume the dollar will always be king. Third, diversify intelligently. And I don't mean the traditional diversification of 60% stocks, 40% bonds. I mean real diversification. Different asset classes, different geographies, different currencies. Some precious metals, some real assets like real estate, some alternatives. The traditional portfolio allocations were built for a world where the dollar was unquestionably dominant and the US was unquestionably the global superpower. But if that world is changing, if we're moving into a more multipolar world with more uncertainty, your portfolio needs to reflect that reality. You need protection against scenarios that might have seemed impossible 20 years ago, but seem increasingly possible today. Fourth, understand that we're in uncharted territory. We've never had global debt levels this high. We've never had this much money printing. We've never had this level of geopolitical fragmentation combined with this level of financial interconnection. Nobody knows exactly how this plays out. Not the experts, not the central banks, nobody. So anyone claiming they know exactly what's going to happen is lying to you or delusional. What we can do is look at the indicators, look at what smart money is doing, look at what central banks are doing, and position ourselves accordingly. And right now, central banks are screaming that they're worried. They're buying gold at record levels. They're diversifying away from dollars. They're preparing for a future that looks very different from the past, and we should be paying attention to that. Now let me talk about timing, because this is what everyone wants to know. Is it too late to buy gold? Has the rally already happened? Should I wait for a pullback? And here's my honest answer. I don't know. Nobody knows. Gold could keep going up for years. Gold could pull back tomorrow. Trying to time the exact entry point is a fool's errand. What matters is the long-term thesis, and the long-term thesis is that the factors driving central banks to buy gold aren't going away. US debt isn't magically disappearing. Dollar dominance isn't being restored to prior levels. Geopolitical tensions aren't resolving. If anything, these trends are accelerating, which suggests that central banks buying will continue, which suggests that gold has more room to run over the long term. Will there be volatility? Absolutely. Will there be pullbacks? Of course. But the long-term trend seems clear, and the long-term trend is what matters for building and protecting wealth. Let me also address something important. Gold is not the only option here. Silver is another precious metal that often moves with gold, but with more volatility. It has industrial uses that gold doesn't have, which gives it a different risk profile. Platinum and palladium are other precious metals, though they're more tied to specific industrial uses. Mining stocks give you leveraged exposure to precious metals, though they come with company-specific risks. There are ETFs and funds that give you exposure to gold without having to store physical metal. There are lots of ways to play this thesis. The key is understanding why you're doing it. You're not buying gold or precious metals because you think they're going to 10x next year. You're buying them because the most informed institutions in the world are positioning for uncertainty, and you want some of that same protection. And here's the final point I want to make. This gold surge is not just about gold. It's a signal. It's a warning light. It's the financial system's way of telling us that something fundamental is shifting. For 80 years, the world has operated under a dollar-based system with the US at the center. That system created unprecedented prosperity. It enabled global trade at a scale never seen before. It financed the modern world. But it was always based on confidence. Confidence that the US would remain the dominant power. Confidence that the dollar would hold its value. Confidence that the system was stable and would continue. And what we're seeing now is that confidence beginning to crack. Not collapse, not disappear, but crack. And when confidence cracks, when faith in the existing system starts to erode, gold is what people turn to. Gold is the fallback. Gold is the asset of last resort. So when you see gold hitting all-time highs, when you see central banks buying record amounts, when you see this happening while stocks are at all-time highs, understand what you're really seeing. You're seeing a world in transition. You're seeing the old order starting to break down and a new order starting to emerge. And nobody knows exactly what that new order will look like. But the smart money, the central banks, the most informed players in the game, they're preparing. They're buying gold. They're reducing dollar exposure. They're preparing for a future that looks very different from the past. And if they're doing that, if institutions with billions or trillions of dollars and teams of analysts and access to information we'll never see, maybe we should be doing it too. Maybe we should be taking this signal seriously. Maybe we should be recognizing that gold's surge is not just about gold, it's about everything. It's about the future of money, the future of the global financial system, the future of geopolitics. And whether you own gold or not, whether you agree with this thesis or not, you need to be paying attention. Because what's happening right now will shape the next decade of global finance. And the people who understand it, who position themselves correctly, who prepare for what's coming, those are the people who will protect and grow their wealth. And the people who ignore it, who assume everything will be fine, who stick their heads in the sand, those are the people who will wake up in 5 or 10 years wondering what happened and why their wealth evaporated. Don't be that person. Pay attention, understand what's happening, and position yourself accordingly, because gold is telling you something. Central banks are telling you something. The question is whether you're listening.